Hello, everyone. Welcome to the market opening bell on Wednesday, May 21st. The four China state-owned banks have each lowered renminbi deposit rates. The demand deposit rate was cut by 5 basis points to 0.05%. Fixed-term deposits saw reductions as follows. 3 months, 6 months, 1 year, and 2-year terms were cut by 15 basis points to 0.65%, 0.85%, 0.95%, and 1.05% respectively. 3-year and 5-year terms were cut by 25 basis points to 1.25% and 1.3% respectively. Meanwhile, the People's Bank of China, as expected, announced a 10 basis point cut to the loan prime rate LPR on Tuesday. The 1-year LPR is now 3% and the 5-year plus LPR is 3.5%. The reduction in the 5-year plus LPR will lower mortgage rates, easing the interest burden on borrowers and boosting consumption. Hong Kong stock rose on Tuesday, ending a 3-day decline. The Hang Seng Index opened 65 points higher and later peaked at 23,709, up 376 points, closing at 23,681, up 348 points or 1.5%. The H-share index rose 128 points or 1.5% to 8,589, and the Hang Seng Tech Index gained 60 points or 1.2% to 5,315. Total market turnover was 205.7 billion Hong Kong dollars. Southbound funds recorded a net purchase of 6.332 billion Hong Kong dollars in Hong Kong stocks, including Meituan 1.234 billion Hong Kong dollars, China Mobile 550 million, China Construction Bank 499 million, Akasol 485 million, SMIC 201 million, PopMart 163 million, and Leap Motor 139 million. Net sales included Xiaomi Group 310 million, Tencent Holdings 306 million, and Sansheng Pharma 120 million. Southbound funds have sold Tencent for 11 consecutive days, totaling 13.9 billion Hong Kong dollars. Xiaomi for 3 days, 1.284 billion, while buying China Construction Bank for 6 days, 4.819 billion, China Mobile for 6 days, 2.678 billion, and Meituan for 3 days, 1.783 billion. Technical analysis, the Hang Seng Index tested 23,700 again. If it holds above this level, the next targets are 23,900 and 24,500, with support at 23,200 and 22,800. Shanghai and Shenzhen markets rose with higher trading volumes. The Shanghai Composite Index closed at 3,380, up 13 points or 0.4%. The Shenzhen Component Index closed at 10,249, up 78 points or 0.8%. Total turnover for both markets was 1.1695 trillion yuan, up 83.2 billion yuan from the previous day. The renminbi central parity rate was set at 7.1931 against the US dollar, down 15 pips, ending a 2-day rise. Back to Hong Kong stocks, Xiaomi announced a product launch event for Thursday, May 22nd at 7 p.m., expected to unveil the Xuanjie 01 SoC chip, Xiaomi 15S Pro, Xiaomi Tablet 7 Ultra, and its first SUV, Xiaomi YU7. The stock surged 4.7% to 54.8 Hong Kong dollars. Xiaomi, one of only 2 Chinese phone makers with self-developed chips, may see market share and value growth. Its investments in phones, OS, and chips are yielding results, with synergies boosting its auto business. Technically, breaking the 48 to 54 Hong Kong dollars range suggests a target of 60 Hong Kong dollars. Bilibili Q1 revenue reached 7.003 billion yuan, up 23.6% year-on-year, meeting expectations. Advertising revenue was 1.998 billion yuan, up 20%. Mobile gaming revenue was 1.731 billion yuan, up 76%. Daily active users hit 107 million versus 102 million last year, and monthly active users reached a record 368 million. Losses narrowed to 9.1 million yuan from 749 million yuan, with an adjusted net profit of 362 million yuan versus a loss of 456 million yuan last year, beating expectations of 256 million yuan. Higher margin advertising and gaming businesses drove gross margin to 36.3% from 28.3%. Ctrip Group Q1 revenue was 13.85 billion yuan, up 16.2% year-on-year. Net profit was 4.277 billion yuan, down 0.8%. Earning per share was 6.48 yuan. Adjusted EBITDA rose 6.9% to 4.247 billion yuan, but the margin fell 2 points to 31%. Non-GAAP net profit grew 3.3% to 4.188 billion yuan. Ctrip's 2025 Dragon Boat Festival Travel Report predicts steady growth, with local and short-haul trips accounting for 50% of bookings. Family and pet-friendly travel, as well as concert plus tourism packages, are trending. Companies reporting earnings today include Baidu, Xpeng Auto, ZTO Express, Weibo, Baozun E-commerce, Tehai International, and Top Sports. Baidu Q1 revenue is expected to range from 30.44 billion yuan to 31.787 billion yuan, down 3.4% to up 0.9% from 31.513 billion yuan last year. Net profit is projected at 3.494 billion yuan to 4.316 billion yuan, down 20.8% to 35.9% from 5.448 billion yuan. Non-GAAP net profit is expected at 4.806 billion yuan to 5.68 billion yuan, down 19% to 41.1% from 7.011 billion yuan, impacted by weak advertising revenue from offline sectors like healthcare, real estate, and home renovation, as well as AI transformation in search. US stocks fell on Tuesday, with the S&P 500 ending a six-day rally. The three major indexes opened lower and traded sluggishly, with losses intensifying in the afternoon. The Dow briefly dropped over 300 points, closing down 114 points or 0.3% at 42,677. The S&P 500 fell 23 points or 0.4% to 5,940, and the Nasdaq dropped 72 points or 0.4% to 19,142. The China Golden Dragon Index, reflecting Chinese ADRs, fell 47 points or 0.7% to 7,330. Trump's tax cut bill continues to face challenges in the House, as some Republicans remain opposed to lifting the cap on state and local tax deductions, potentially jeopardizing the goal of passing the legislation before the Memorial Day holiday. The U.S. Treasury does not expect trade agreements to be announced at the G7 finance ministers meeting in Canada this week, though sources indicate significant progress with several G7 partners on trade. U.S. Trade Representative Tai will meet Japanese officials during the meeting, but U.S. Japan trade talks are expected to occur in Washington. On monetary policy, Fed officials' remarks continue to signal a pause in policy changes. Elon Musk announced he will remain with his company for at least 5 years and significantly reduce political donations, shifting focus back to Tesla and other business operations. Tesla rose as much as 3.8% but closed up 0.5% at $343.82 US dollars per share. Alphabet fell 1.5%, closing at 163.98%. Its subsidiary Google unveiled a premium subscription plan, Google AI Ultra, at its annual developer conference, priced at $249.99 per month, higher than ChatGPT's $200 premium tier, indicating Google's push to further monetize its AI technology. Nvidia dropped 0.9%, closing at $134.38. Stock pick today is Junshi Biosciences, stock code 1877. Junshi Biosciences is primarily engaged in the biopharmaceutical business, with its innovative R&D expanding from monoclonal antibodies to include small molecule drugs, peptide drugs, antibody drug conjugates (ADCs), bispecific or multi-specific antibodies, bispecific antibody conjugates, fusion proteins, nucleic acid drugs, and next-generation therapies for cancer and autoimmune diseases. The company has 4 commercialized products: Toyi, Junmaikang, Mindawei, and Junshida. Its core product, toripalimab, trade name Toyi, is China's first domestically developed anti-PD-1 monoclonal antibody approved by the NMPA. It has received approval for 12 indications in mainland China, with 10 included in the National Medical Insurance Directory. Toripalimab is approved in mainland China, Hong Kong, the US, EU, India, UK, Jordan, Australia, Singapore, and other regions, and is the first Chinese developed and manufactured innovative biologic approved by the FDA. The company operates 2 commercial production bases: Wujiang, Suzhou base with a 4,500-liter fermentation capacity. It has received GMP certification from China, the US, and the EU. It produces commercial batches of toripalimab for markets including the US, India, and Hong Kong. Lingang, Shanghai base with a 42,000-liter capacity. It has NMPA GMP certification and supports commercial production of toripalimab alongside the Suzhou base. The scale of the Lingang base provides cost-competitive production advantages and supports clinical trial supplies and future commercial batches. In Q1 2025, the company reported revenue of 500 million yuan, up 31.5% year-on-year. Toripalimab generated domestic sales of 447 million yuan, a 45.7% increase. The company has implemented a quality enhancement, efficiency improvement, and return-focused strategy, boosting sales efficiency and focusing resources on high-potential R&D projects, resulting in reduced losses compared to the previous year. Junshi's R&D pipeline covers 5 therapeutic areas: malignant tumors, autoimmune diseases, chronic metabolic diseases, neurological disorders, and infectious diseases. Nearly 30 drug candidates are in clinical trials, with over 20 in preclinical developments. Recommendation: buy at 15.3 Hong Kong dollars, target $16.8, stop loss at $14.5. I do not hold the above stock.